All right. Welcome to Clarity Sessions with Bill Fauth, where we cut through the noise and bring you real, practical clarity on money, business, mindset, and everything in between. Now, if you're a mompreneur, a business owner, or someone who's just ready to take more control of your financial life, this is your space. No fluff, no overwhelm, just simple, powerful insights you can actually use. Because let's be real. When you got the right clarity, you make better decisions, and better decisions lead to a whole different life. And so let's get into it. Today's question is,
what is a SEP IRA, and is it the right option for a self-employed business owner?
Or what is a SEP IRA, and is it right for me? And that's a great question. And SEP stands for Simplified Employee Pension Plan. So if you are self-employed, then this is the vehicle that you use to create an alternative or a substitute or the equivalent of a 401k or a 403b if you're working for the government or a not-for-profit. The idea is a retirement plan that self-employed people get to set up, and they can take some of the money that they're earning and put it aside into the Simplified Employee Pension Plan, take a tax deduction for the money they're setting aside for their future, and then it grows under a tax-deferred umbrella until they actually use the money in retirement. So it's a great way to save for the future. In fact, it's for self-employed people. So the short answer is yes, it makes sense to do that. The other thing is just to talk a little bit about this, if you want to get into the weeds a little bit on this. There are two types of contribution plans that Congress set up. One is called a defined benefit plan. And this is things like a pension, and like the post office and the government, and a lot of not-for-profits or teachers and government employees have a pension plan, meaning that when you retire, you get a paycheck or you get a check for the rest of your life. And it's got nothing to do with your assets. And when you die, the money dies, so to speak. But it gets paid into. So the benefit is defined. The money that has to go into the defined benefit plan is what's the variable. And that's where, as a self-employed person, you can set up a defined benefit plan and get big tax deductions for putting money into the defined benefit plan. But most for-profit, corporate employers have done away with those in lieu of what they call the defined contribution plan, which is where the contribution is defined and what you get at the end is undefined, or it depends on how well it grows. So the contribution now is a percentage of your earnings. And this is where the 401k comes in, and there's rules around that and so on. So the 401k or the 403b or the SEP IRA lets you put aside a certain percentage of your earnings into this plan. The money grows tax deferred, or if you don't take a tax deduction, tax free. And then when you go to use the money later, it's either you take it out and you share it with the government, or you take it out and it's tax free, depending on the type of plan that you have. But the idea is that the money going into the plan, the percentage that goes in is defined, and what comes out is undefined, because you don't know how it's going to grow. Whereas a defined benefit plan, you know what you're going to get at the end, but you don't know what you have to put in. So typically as a business owner, particularly as a business owner that has cash flow and is looking to save for retirement, and they have more than enough income and looking to save taxes, setting up what they call a tandem plan or a combination plan where they have a 401k and they have a defined benefit plan, and they're saving a big time for their retirement.